Stocks kick off busy week in the red. Oil retreats as a potentially crucial week for global trade and monetary policy got underway. South Africa's central bank governor sees no reason for a Moody's rating downgrade. Plus, shopkeepers take stock after looting during Zimbabwe protests. Thank you for joining us and welcome to Business Incorporated. I'm Chimezie Obi Iwago. First, the markets. And here in Africa, only the Nigerian market amongst the markets we track on the program is down at intraday trading 0.39% low. South African JSE index was up 0.17%, while Egypt was up 0.46%. Kenya closed in the green on Friday. In the Middle East, it was all green at intraday. Dubai financial market led gains up 1.23%, while Saudi SE followed with 0.61%. Abu Dhabi was up 0.61% and Qatar rose 0.34%. And major Asian stock markets closed lower today following a turbulent trading session as investors waited for a new round of high-level U.S.-China trade talks, which is set to begin later in the week. The mainland Chinese markets, watched closely due to the ongoing trade war between Beijing and Washington, lost their early gains to close lower. The Shanghai Composite shared about 0.18% to close at approximately 2,596.98, while the Shenzhen Composite slipped 0.37%. Hong Kong's Hang Seng Index was largely flat as of its final hour of trading, with shares of Chinese tech giant Tencent slipping more than 0.5%. In Japan, the Nikkei 225 slipped 0.60%, while the Topix fell 0.68%. South Korea's Kospi closed largely flat at 2,177 points. Australia's stock market was closed for a public holiday. And stocks in Europe started the week on a negative note as investors monitored Brexit developments and looked ahead to new U.S.-China trade talks. For more, Paul Christian Breeze joins us now from the Frankfurt Stock Exchange. Hello, Paul. A beautiful week to you. Good to see you back again on the trading floor.
Hey.
So tell me, U.S.
Nice
earnings. You're welcome on the show. U.S. earnings season continues this week. What companies' earnings are you watching for guidance on the mining and, of course, update on China-U.S. trade tariff dispute, even as U.S. manufacturers say their sales in China is plummeting?
We've got some very, very big names coming out this week. You've got Facebook, we have Amazon, eBay, PayPal. A lot of the tech companies are coming out with their earnings this week. And one in particular is going to be interesting, and that is Apple, of course. Apple is no longer the world's most valuable company after it had to pre-announce its revenues earlier this month, because iPhone sales in China were slumping. It's really, really having trouble selling iPhones in China. That's, of course, a result of the trade conflict that Donald Trump, U.S. President Donald Trump, is fighting out with China. The company did not expect that, did not expect it to have such a significant impact, and yeah, therefore suffered a lot. So we'll see how this plays out exactly in the earnings. Another company that will be looked at very closely is Caterpillar. The machine maker suffers in two ways. First of all, it is suffering from increased commodity costs and metal prices that have really costed a lot of money in its third quarter. And it's also suffered indirectly because demand for its product in China has been lower. So now the view will be on this company to see have they been able to turn around things in the fourth quarter. Outside of the U.S., there's also going to be talk about U.S.-China trade relations because Alibaba is also coming out with earnings, and will of course talk about how the situation has affected China consumer spending.
Well, still in the U.S., the government shutdown over financing of Mexican border wall has ended. What is the price tag of the shutdown, not only for the government in Washington, but also the toll on American businesses? Hello, Paul. Yeah, I was asking about the.
No, Jimmy, I can't hear you right now, but
Yeah, I was talking about
we
the
did want to
government
talk about
shutdown in the
the
U.S.
U.S. Shutdown. It's been 35 days. That's a long time for a government to shut down, and it does come as a significant economic cost. Now, as a reminder, 5.7 billion is what Donald Trump wanted to finance the border wall. 5.7 billion. Now, Standard & Poor's, the rating agency, came out with an estimate that this shutdown probably has a price tag of $6 billion. That is more than the initial cost for the wall. Now, how does it affect businesses? It affects business in a lot of ways because they depend on the U.S. government to work. For example, the IRS. Taxes. Now you may think, okay, that Internal Revenue Service closing down is not such a bad thing. Well, it is if you are waiting for your tax refunds, because that is money you might use if you have a business to invest in product or in machines. Similar thing, the SBA, the Small Business Administration, that gives out loans for small businesses and has effectively been halted. No loans means no investment, and again, suffering economy. And then we've got the SEC, the Securities and Exchange Commission. Without it, there are no IPOs for larger companies. They can't go public. Also, the SEC administers a lot of financial products. So without an okay from the SEC, banks, for example, can't issue new financial products. And on top of all of this, a lot of non-paid workers who live from paycheck to paycheck just aren't able to spend money that they could have otherwise spent. The White House economists from within the White House even go beyond the S&P estimation. They say 0.13% of GDP is lost per week. That would amount to $26 billion in total for this shutdown.
All right, let's get back to Europe where you are. The shareholders of Deutsche Bank says Commerzbank tie-up deal will paralyze Germany's largest lender and, of course, destroy value for investors. How real or imagined are Deutsche Bank shareholders' fears?
So again here, I'm flying by ear, but very few people would like to see a merger between Deutsche Bank and Commerzbank, even though both banks are suffering. The people probably most happy about that would be politicians, German politicians. The German finance minister really is pushing for this merger. The talk about this has come up repeatedly, especially because he wants a strong German bank to be able to be independent of international players. So be independent of US banks, be independent of the rising Chinese banks, and just be there as an international power. However, there's a lot of concern about this merger because if you put together a sick bank and a weak bank, are you really going to get a national champion? There's a lot of doubt about that. To give you a perspective, Deutsche is only worth 16 billion euros as of right now, market valuation. Now, JP Morgan could buy Deutsche Bank with its yearly profits twice. So it really doesn't compare anymore in international comparison with other banks. There are some arguments on the pro side for this merger because it would probably save costs. An estimate is about 30% of the cost could be cut if the two banks joined together. And cutting costs is really what has been in the interest of Deutsche Bank's CEO Christian Sewing for the past 10 months that he has led the bank. He has cut costs significantly and is working on getting a stable income for the bank. It does look like the earnings that are due on Friday will show the first positive result, the first profit in 4 years actually, but is he going to be able to work this fast enough before politicians decide it's time to end this? Will he be able to turn the bank's fate around from this terrible past that he's trying to recover now? Qatar has just said that it is interested in an investment in Deutsche Bank, so raising capital that might buy the bank a little bit of time. The question is still, is it going to be enough?
Thank you very much, Paul. We sincerely apologize for that audio issues there. But anyway,